Hello everyone, greetings wherever you are. Um, Today we're gonna have something very important, yet simple in my opinion. If you just take your time to observe what we're gonna show you today and go back into your charts to market, it wouldn't be a very long session as well because there's not too much complication into it. We're just gonna be looking at one of the aspects of the methods or strategies or the way we trade, in this community. And one of the major foundation of our trading is something called market structure and the market structure break. So once there's an understanding of this simple but effective, happening in the market, you'll be able to approach your charts a lot more confident, knowing what to do at every point in time. This would tie in with many other things, with your entries and some other patterns that come into play later. So today we're going to be looking at market structure, as we said, a market structure break. We would want to find out what is market structure and how to identify market structure and what is a market structure break. And we're going to be looking at all of those things. So before I go on, I'd just like to introduce myself. My name is Tokwe Opedo. Also a trader. I've been in this business since 2000 and I'll say 2008, 2007, 2008, since I had my son, and I've gone on to you know, um, understand a lot of things in the market. I've created my own trading strategy. I've taught it to hundreds and hundreds of people, globally. And I started that journey, I believe, early enough. That's when I came across Israel. Such a lovely man that he is. We started to rub minds, and our journey started there, and the rest is history. We're now collaborating, now working in this brilliant community, hoping to help and support someone into greatness, and hope, obviously, and hopefully getting to where you want to get to very soon. Okay, so that's a little bit about myself. Um, yeah, so we'll be going ahead with the session, but I'm sure as time goes on, you'll be knowing more about me. I'll be sharing many more info with you. Okay. Um, so today we're going to be covering what is market structure, how to identify market structure, and what is market structure break, identifying market structure break. What I'm going to try to do is to make this very, very, very simple. I'll try to make this very simple so that my 11-year-old son can watch this video again and understand. By the way, he understands what market structure break is now. He knows how to find trends in the market. At least he can do that now. If an 11-year-old can do that, I believe you can do that because some of your professionals and you've come from very, very strong background in analysis, analytics, and data and all that kind of stuff. So you should be able to get this. So I'm going to make it very simple. I'm not going to use too much market jargons. Um, and I don't think I'm that good with big jargons. I leave that to Israel. He's the guru when it comes to those market, you know, jargons and professional terms, some of which I'm still catching up with. I'm going to be pulling out my dictionary to get some of them. Um, but here goes. So today we're looking at market structure, and very simply, what is market structure? Market structure is a series of higher highs, higher lows, and lower highs and lower lows. And what I mean, you can just look at that on the screen right now. Let me get my pen to just show you what I'm trying to say. So when we say market structure is a series of higher highs, higher lows, and lower highs and lower lows. So as you can see depicted in this picture here, structure. So this movement here this is a structure, and this is a structure, and this is a structure, this is a structure, this is a structure. Okay. So market structure is a series of higher highs and higher lows and lower highs and lower lows, what have you. In this case, we're just looking initially at swing highs, for example. So we're just looking at a market that is stair stepping up. So the main characteristic of market structure, and in fact, each of these higher highs and higher lows is they are a three candle formation. Whenever you get to a major swing in the market, um, or any swing at all, in fact, is always characterized by three candle swings. Okay, some of the great traders in the past and who they have actually programmed, one of his way of looking at the market into MT4 is um, Bill Williams, and he uses something called fractals. His fractals look at five candles, but by the time five candle swing highs or swing lows are completed, the markets have really, really gone far that you can't enter at a, cheap price to enter a short trade, or you wouldn't be able to enter into, any good trade by the time the five candle formation is formed. And the three candle formation, is as if not better than the five candle formation. Okay, so this swing highs, this structures here at the very tops here and the lows here is characterized by three candle formation. When I say three candle, just candle one example, candle two, and candle three. Okay, so wherever you have this three candle formation, you want to observe something. So when you see three candle formation, you must identify the first one, which will be in the middle. The one in the middle must be, if we're looking at, a long or a bullish trend, you want to find that the swing high, the candle in the middle rather, sorry, is higher, or it's created a higher point that is higher than the two candles next to it. So we have three candles. One in the middle must form the highest point out of the three, whilst the highest point of the second and third candles must be below this. So it wouldn't come across looking beautiful like this all the time. Okay, this just looks like a perfect candle. Sometimes you have, them one's the high of one is there and the high of the second could be lower there. So you could have, but you could have in, looking different. Some could look this way, very close to the high, and the other one like that, or another one that way, and lower down here. So you could have variations, but what matters is the middle candle must create the highest point. That is the main point. The middle candle must create the highest point. And when it creates that high point, that's what we call a swing. Okay? If it is going up, it is a swing high. When we have this formation at the bottom, it is a swing low. Okay? So that's one of the major characteristics. Okay? And if we're looking at, market going up, we're forming higher highs. We'll be forming higher highs. So that means we're going higher past the previous high. We're going higher past the previous high. And when you look at that, if you look at those points, like we said, you see three candle formations, and inside you see the middle candle, it's highest, has the highest point above the one on the left and on the right. Okay, so that's the main characteristic or character or the look of a swing high or a swing low. Okay, and that's what forms the higher highs, higher lows, and the series of all higher highs and higher lows is what we call the market structure. Okay, right. So in that same breath, I've already covered how to identify market structure. Well, identifying it again, let me just go over it, is you must have had, market moving in a certain way, and then you see a move down. So in this case, let's look at the market going up. So you can see going up, coming down, going up, coming down. They call it breathing, they call it retracement, they call it many names. I'm not going to confuse you with all of that now. Let's just say the market is stair stepping up. Yeah, it's going higher, it's going higher, it's going higher. When the market is going up and is forming higher highs, we want to see that when it drops down to take a rest, the low it creates is not lower than the previous low. Because once that happens, it is trying to tell us something else. Okay. So we identify a market structure by just looking at the swing highs and the swing lows. Check out the three candle formation. If we have it in there, then it's perfect. If you have a candle like this, um, if the middle candle is lower than the one on the left or on the right, we don't take it as a swing. Okay, so that could be ignored. If you see a candle, the one on the okay, there's a middle candle, the one on the right is the one on the left is lower, and then the one on the right is higher. So that's the highest point. That is not a swing. What we want to make sure is happening is the middle candle is sticking out like a sore thumb. It's got the highest point. Okay, it's got the highest point. That's what we want to make sure is happening. So that is the look of a swing and how to identify a market structure. A market structure, so you would have had, the three candles and then the series of higher highs and higher lows. The combination of all of this is what we call a market structure. Sorry if that's confusing. Let me clarify again. So the market structure, like we said, is a series of higher highs, higher lows, lower highs, lower lows in the case of coming down. So all of this is from the market structure. Okay. And this is telling us something about the market. But within this, there is what qualifies this point to be the higher high? What qualifies this point to be the higher low? It is this three candle swing that we're talking about. This three candle formation. So if you go in to your chart and you check out all the swing points, you should be seeing stuff like this. Three candle formation. Okay? Three candle formation in there. So that's how it looks like for the bullish looking market structure or swings. Now, when we are considering for the opposite direction, if the market is in a bearish disposition, we should be seeing same thing, three candle formation at the bottom, yeah, of every swing lows that you see. This same thing is applicable here. So every swing low, you always, basically every swing point, every point that creates a higher high or higher low or lower high or lower low, you will be seeing three candle formations, or you should be seeing three candle formations. So we're looking at this now. In case it's a bearish market you're looking at, we will be having the market prices doing this dance. So it will come down, go up. This new high is not breaking this previous high over here. Comes down again, closes below this previous low, creates a lower low, goes back up. It doesn't go past that previous high, comes down again, confirms that the market is on its way down. Now, let me mention quickly, just in case I forget, one of the major use, and if not the only use actually, of market structure and the swings is to determine the direction of the market. Okay, it is to determine the direction of the market. This helps you to create your own bias. This helps you to know where you are in the market. This helps you to know what you want to do in the market. Do I want to buy? So if I'm seeing price breaking lower, so I'm having lower lows created here, I'm having higher highs. So this high is not going past that high. Market keep going down. Why do I want to buy? Okay. There's always this saying in the market. They say the trend is your friend. Okay. That's what they always say, and that's what we aim to do. Once you're able to follow the trend, you will be happy 9 times out of 10 times. Okay. Yes, there'll be losses, but you would know why when it happens. So if the market is going down, the swings has told us it's going down. Okay. And now what I've shown you happening here, just on these, lines here, this happens on every time frame. You can go on your daily and you see this. You can go on your weekly and you see this. You can go on the monthly, you see it. You can go even on the 15-minute, you see it. Every time frame has got this happening. Swing up, swing down, swing up, swing down, swing up, swing down. Continuously. That's what the market does, okay? However, the higher the time frame you look at, the more stronger or more solid or more convincing the swing. So if you're looking at this on a weekly, for example, where each of the candle is 1 week worth of data or 1 week worth of transaction, right? You would agree with me that that's billions and trillions of dollars they've used to move the market in that direction. And therefore, the swings they've created on the weekly time frame will be a lot stronger than the swing they've created on the hourly time frame. Okay? It will be a lot stronger than the one they've created on the 15-minute time frame. It will be a lot stronger than the one they've created on the daily time frame. Okay. Um, as time goes on, I'll also be showing you some other ways, smart, easy way to just look at swing highs and swing lows easily without even drawing lines, just by observing your candles. Okay. That will be coming in subsequent lessons, or if you join into the main group. Okay, so I hope you've been able to understand, what market structure is. Without this is me without adding no jargons, nothing, not just being plain and simple as much as I can be with yourself, so you understand it. And this is how it looks like for swing highs. So at the top of the swings, you have this three candle formation, and at the bottom, you will have this three candle formation. Okay, market structure break. What is market structure break? Market structure break is exactly what it says, break of market structure. So it's not a trick question. So we're creating, remember, we're saying a market structure is a series of higher highs and higher lows and lower highs and lower lows. Um, and the break just simply means when, price moves past a previous structure. So for example, here's a structure. When you have a high point, created, and you have a low point, sorry, you got a low point created in the market. You have a low point created in the market. This and this has already given us structure. Okay. So that's a structure, that's a structure. So let's assume that we are at this point in the market, this point in the middle here. So the first thing you will identify is I have a low, I have a high. What is the market doing? Where is it going? When you are in the middle here, there's no way. We're assuming that we don't have any data here. All we have is this low, price rallied up, and it's on its way down, and we're here. How can you tell where price is going? Or how can you tell if price is moving south or it's moving north? You couldn't tell until this happens. Price comes down below the previous low and closes. I repeat, closes. Say this to yourself. Price must close below a swing low to tell me We are selling. It must close above a swing high to tell me we are buying. Okay. Now, I'm not saying at the point that price closes below, you should jump in to buy. Okay. There's some strategies for that, depending on the level and the time frame you're looking at. I'm not telling you to do that. I'm saying this is a first clue of the direction that you're looking for. Okay. Your first clue. So what we then need to do is just wait. We just need to wait for market to close below. Once it closes below, then we know that price is going south. The same thing if it's a bullish market, you see price do something like this. Price comes down, goes up. That's a new swing high. Comes down, doesn't go below that low, goes higher, break that high. That tells us price is going north. Okay. So, if you want a definition, market structure break is when a swing is violated by having a session close below or above a swing high or swing low. So, there's a swing high, swing high, swing lows, swing lows. You see, price came closes below. That's a break of the structure there. Comes closes below. That's a break of structure there. Okay. I hope you're soaking this in. You can always watch this over again. I'm trying to make it as simple as possible. And now there's this final scenario in the market that would and could and always happen. This happens every day, every month, every week. There will be points whereby the market is not breaking any structure. No structure is breaking. So they call it, I didn't want to start using jargon. They call this kind of um, happenings um, consolidation or accumulation. Okay. Can see there's a swing low, there's a swing high, and price is just bouncing between the two. Okay. This is when we don't have a higher high or lower low. There is no direction. The market is just gathering orders. Okay. So this happens in the market as well. Okay. And this is what you this is the way the market is formed generally. These are the three things you see in the market. You see your higher highs and your higher lows and lower highs and lower lows to tell you about the direction of the market. Okay. So I hope you've been able to, I hope this lesson has been able to shed some light into the market for you. What I would like you to do is to please go on your chart and just start marking swing highs and swing lows and identify, see if you can try to determine the direction of the market. See if you can, you know, better yourself at analyzing direction of the market by just this simple principle. And before the next lesson, post questions and I'll be more than happy to, answer every one of your questions. Okay? Um, and I do hope to find questions. So as simple as this is really, really powerful, guys. This is really, really powerful. As simple as this is. Once you're able to understand that this is all the market does. Series of swing highs and swing lows, and the times when the market consolidates. Okay? So that is all there is to market structure and market structure break. Okay. And that's one of the major pillars of the way we trade. There's some other major points that we would share with you that once you combine those principles along with, when you combine everything together, it becomes something solid for you. And then, it will take your trade to another level and you'll be able to look at the market in a different light. So with that said, tonight, with that said, I'll just conclude this video. I really hope this has been helpful to you and useful to you. If you have any question, please send it to us. There will be emails and contact info attached to this video as it is recorded as well. So I wish you all the best and speak to you soon. Bye.